So hello guys, what's up? How we doing? Hope you're all doing great. It's another video from EasyFX once again. And this video is gonna be about entry, how to get a perfect entry. So like I said, I promise you guys that I'm going to make this video on entry because when I post the setup in the group, I know so many of us don't know how to enter the market after posting the setup, and so many of us get confused and we miss a lot of setup that I post because we don't know how to enter the market. So that's why I'm purposely creating this video. And I made a poll and we all voted. And yeah, it was an equal vote on market structure and entries. So it was the vote was the same. So I'll just have to create the two videos. So, but I'll be creating this on entry first, so that whenever I post the setup, we can all follow up and make money. So now in this video, I'm going to be talking about entry type, especially when price approaches the POI. So I remember last week or this week, this week I was saying something about POI in the group, where I was talking about when price is approaching a POI, it's not a call for you to start pulling the trigger. No, 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 no. When price approaches your point of interest or your area of interest, it's a time where you are interested in the market. That's where you are. That's when you are interested in the market. No, that's when you want to start pulling the trigger. Hope you understand that now. So when we do our analysis, maybe in the higher time frame, and we pick our POI, and once we see price approaching our POI, we want to be very, very ready to start noticing some kind of structure. So the first thing to do is to wait. When price approaches your POI, the first thing for you to do is to wait. Wait. When I mean waiting, I mean you should exercise patience for a structure shift. And this will always happen first in the higher time frame, not the I mean first the lower time frame, rather, not the higher time frame. So if price when price approaches our POI, the first thing we want to look at is we want to see the lower time frame change structure from either bullish to bearish, or if we are in a downtrend, we want to see price switch structure from bearish to bullish. And when we are in an uptrend, we want to see price shift structure from bullish to bearish. Like, we want to get the change of character from the lower time frame first. And what I prefer and what I take is the 15-minute time frame. The I also use 3 minutes and 5 minutes also, but when you begin to go down to the 1 minute, sometimes it gets tricky there, and you might get liquidated if you're not able to spot the proper swing high and lows of the 1 minute time frame. So hope we get that now. So most times I prefer the 15 minute because it's same thing happening in the all of the time frame. We just have to get that. That's just the truth. It's the same thing happening in all the time frame. The structure shift, it will first of all happen first in the lower time frame. There must first of all be that change of character first in the lower time frame before price will head ahead to clear out the swing high. After clearing out the swing high, before we get even before price will start retracing back to POIs around the discount, there must still also be the lower time frame switching structure to the downside and mitigating the POI. At the POI again, the lower time frame will still switch structure to the upside. There must be a structure shift to the upside in the lower time frame before price will take out the swing structure also. Then the swing structure will pull back, and all the pullback is another trend entirely in the lower time frame. Hope you all understand this logic on market structure, because it really help us, because we basically what we trade as SMC traders is structures. Because what we do is we want to spot the highs and lows, that the swing highs and the swing lows. And when price breaks structure, we want to anticipate to ride from the pullback from the POI. So that's what we do as SMC traders. And in getting a good and perfect entry, you must also put structure in mind. Hope you are getting that. We must also put structure in mind for us to get a perfect entry. There must be structure in mind. So when price approaches our POI, let me first of all say this: a POI it's a valid one when we want to see our POI or our point of interest clearing liquidity. There must be a grab of liquidity to the upside, then we want to see price break structure to the downside. So we can clearly pick this as our POI. Why? Let's say because why we break structure. Why? Because we clear out liquidity rather. There was a liquidity grab, and we want to spot some imbalances around the zone, and maybe liquidity and inducement. Then liquidity rather, because most times inducement is formed when price start to approach POI to lure other traders to enter the market at the wrong time and grab all of their stop losses for the main ride to the downside. So this is what we want to see. So when we want to trade off our POI, first thing, one of the important thing to do is to wait for the inducement to be created, because price will want to lure traders to take the trade too early, then coming to grab their stop losses for the proper move. Like I said in my previous video, liquidity, understanding the concept of liquidity, it's very very important. So I'm not going to be talking about liquidity. You can check out my videos here on my channel. You are going to see where I talked about liquidity and inducement. So let's just get straight to the point where we want to talk about entries. So look at this now, guys. This okay, let's okay, as you can see, I have drawings on my screen. I have this three drawings on my screen. Okay, now let's give this the 4-hour time frame. Let's give this the 1-hour time frame, and let's give this the 15 minutes time frame. Okay, now let's say this an uptrend in the 4-hour time frame, isn't it? There's an uptrend, and let's say these are the swing highs and lows of the 4-hour time frame, isn't it? So now we see that we have this break of structure to the upside, this break of structure to the upside. So we are in an uptrend. Now let's call this the internal structure of the 4-hour. Let's call this 1-hour time frame that we are seeing here, because that's what we just said. Okay, now I want us to know that we must understand the, the internal structure of the time frame we are playing at. So I just want us to know that the 1 hour is the internal structure of the 4-hour range. The 15 minutes is the internal structure of the 1-hour range. The 4-hour is the internal structure of that of the daily, while the daily is the internal structure of that of the weekly, while the weekly is the internal structure of that of the monthly. So that's how it operates. So before we want to before the let's say for instance, now in this market, the intention of this market is to switch bearish. Okay, now for this to happen, the lower time frames will first of all switch bearish, one after the other. From the 1 minute, the 1 minute swing highs and lows will be taken out before price will take out the let's say the 3 minute swing highs and lows. After taking out the 3 minute swing highs and lows, price will hunt for the 15-minute swing highs and lows. After taking out the 15-minute swing highs and lows, price will hunt for the 1 hour swing highs and lows. Then let's say the 4-hour swing low. Then we know the 4-hour itself has switched bearish, just as we can see here now. So first of all get the lower time frame switching structure. Isn't that true? Yes, it's true, because all of this price action, all of this structure happens across all of the time frame, because that's how price moves, creating higher highs and higher lows. So the the 4 hour to to fulfill these intentions, to switch bearish, the smaller time frame, the lower time frame, first of all switch structure to the downside, right from the 1 minute even to um the seconds, like the 30 seconds, and all of those all of those lower time frame. So there must be a structural shift there for us to take the trade. But it's what I would advise is it's good to stick to, let's say, a specific time frame for your entry, because it will really help you, because the lower time frame sometimes can be very much tricky if you don't or identify properly the swing highs and lows, you might end up being liquidity there. So that's why sometimes I stick to the 5 minutes and the 15-minute time frame. So because once I see the 1 minute, or let's say the 3 minute swing highs and low taken out, and let's say this is the 3 minutes chart, and let's say we have this structure here, uh, broken to the downside, and let's call this, okay, let me do the drawing here. Okay, let's say this is the, okay, sorry, I picked the wrong tool. All right, the let's say this is the 1 minute time frame, isn't it? And we are at a POI now, and we know this is the, let's call this the swing low of 1 minute time frame. This is the swing high, and let's call this low here, this specific low here, the 5 minute swing, the 5 minute swing low. So now if you see price break this structure here to the downside, we already know now that yes, the 1 minute is now bearish, and yeah, we expect a pullback to mitigate a POI. Then boom, we break structure. Now look at this. Now we have the 5 minutes time frame switch structure to the downside. So now we confirm from the 5 minute that yeah, we are in a bearish market, and what we want to anticipate is a pullback to some 5 minute OB, and most times the internal structure becomes liquidity, because now the main aim was to take out the swing low. So the internal structure of the 5 minutes, let's say it's the 1 minute time frame, so all the structure form, the highs and low form, the 1 minute time frame most time becomes liquidity, and price probably will grab all of this liquidity to the upside, then mitigate the POI. Then that's how we get price keeps going down right from the lower time frame. Then let's say we have the 15-minute structure. um if we see the 15 minutes change structure to the downside, that means we get the 15 minutes choke now, and after getting the choke we want to say a pullback. Since we have the intentions of the 15 minutes fulfilled, which is to take out the swing low or the 15 minutes, what we want to see now is everything in that range becomes liquidity, isn't it? So we want to see price grab some liquidity, then want to pick the best POIs, which I've already created a video on that, so you just go check out on the video on how to pick POIs. Then we have the liquidity grab to the downside. Let's say now this time around we break structure, the 1 hour structure, the 1 hour swing low, and with the 1 hour as structure to the downside. Okay, let's use this as example now. Okay, now let's say this was the 1 hour structure, and yes, after price keeps going down, and now we broke the 1 hour structure. We now know that yeah, the 1 hour is now um bearish, and we know the intention is to take out this low, isn't it? The intention is to take out the swing low. So after taking out the swing low, we now see that price still pull back, and this is how price continue to move right from the lower time frame to the higher time frame. So hope we get that now. So there must always be a structure shift first from the lower time frame, and this is the basis for high entry, because we want to catch the price from a very good point. Yeah, we want to get that sniper entry with zero drawdown most times. Isn't that so? Yeah, so that's how this lower time frame first of all switch structure, and that's what we want to follow. That's why we switch down to the lower time frame. So whenever we see price approaching a POI, let's say we have this, okay, sorry about that. Okay, now let's say we have this POI marked out. Now we have price approaching this POI. Let's say this is the 4 hour time frame. So this is not like a clear sign for you to just start either buying or selling the market, or let's say selling the market now. No, this is not the best sign. Approaching your POI doesn't mean you should start selling. Approaching your POI means you should pay attention to the lower time frame. If you see the structure shift there and you confirm that price is going down, that's when you consider entering. And what price does most time, price will first of all create inducement. Put this at the back of your mind. Price will most times create inducement, then grab the liquidity, mitigate the POI, then we see price from the lower time frame break structure to the downside. That's when we start looking at the 15 minutes time frame, 5 minutes time frame. We want to see that choke happening there. They want to see price retrace to another block. Then we take the right, aim it at the swing low, because we know that, yeah, that's the intention. And once we have this swing low smashed down, smashed to the downside, the thing is we should always expect a pullback, because now we have the intention of the um, swing low or swing high fulfilled, because we just want to see the break of structure, and we know that after a break of structure there must be a pullback. So this is where you start taking partials, and the rest of that you start closing some profit, if not closing all. And if you trust your analysis and you already know where the price is heading, you can swing and the rest of that. But after the swing low should be your first target. Hope you understand that. The swing low should be your first target. So this is what I do for my N3. This is what I do for my N3. But most time I stick with a 5 minute and 15 minute time frame for my N3. So I wait for the chalk to happen there. So once I get the chalk there, I wait for the pullback to um, a valid POI around the range, then I take the right to the downside. So that is how to take a proper entry. So now let's dive into the chart and let's see how we can do justice to what we have explained. Okay, now look at this, guys. This is um, um card Swiss franc, and yeah, we ate some pips from this chart this week rather, so look at what happened here, guys. We have this POI. I remember I posted the analysis here on YouTube, how we arrived here, and yeah, I posted the analysis here on YouTube the when we were doing the analysis. So you can check my channel, you can check the videos there, and you will see where I talked about card Swiss franc. So we have price approaching our POI. We got the imbalance field. We see the liquidity grab, which made us pick this POI. We saw it already mitigated the previous POI. So we have this valid POI. Now we see price created the inducement here. Like I said, always wait for the inducement. We saw that price broke structure to the downside, which is luring so many traders to start taking their positions from here, because now this is a valid order block, but it's too obvious. I don't like trading from too obvious order block, because it might most times too obvious order block serve as liquidity, yes, because it's too obvious. Like I said, think like the way they think. So we want to think like the way the market makers think. So this too obvious order block is not interesting for me. Yeah, though we have the imbalance and all of the stuff, but it's not interesting. So look at this now, guys. This break of structure here is already to some newbie traders who don't understand this liquidity and inducement stuff, already seen this as a change of character to the downside there, and most of them already taking positions, putting their limit orders around this zone here. And as you can see, guys, we had some little reaction from this zone, but as you see, price grab all of this liquidity, mitigated our POI. Now look at this now, guys. We have price at our POI, as you can see here, like this one here, the EQ of the range. So now this is selling from here isn't bad, but to get that confirmation entry, to get that perfect entry, we have to switch to the lower time frame. Yeah, we trust the analysis. We know that price is going to give some massive reaction from that point that can earn us money. But yes, we want to enter at the right spot, because this is trading. It's all about probability. Price might just approach our POI, just give us just a little reaction, then boom, to the upside. We never know. We don't know what price will do. We don't tell price what to do. So that's why we always want to go to the lower time frame and trade from there. So now let's move to 15 minutes. Okay, this is the 15 minutes time frame, guys. Nice one. So look at this. Okay, look at this, guys. We see now that we have all of these reactions here. We have price took out this low, as we can see. We see price took out this low. Now we have the pullback to this order block here, where we get price reacting from. As you can see, this for me is another a confirmation entry, because look at the structure that we have here, guys. This swing, we have the swing low here. So okay, so we have this low, we have this high, we have this low, and now we broke this high, we have this low, and we broke this high, and we mitigated the EQ, and now we have price breaking the low. We have this change of character here in the 15 minutes time frame. We have this beautiful change of character, and now we want to see price retrace. Okay, no, that just left the screen. Okay, let me do that again. We have this high. Okay, we have this. Okay, we have this low, we have this high, we have this low over here, we have this high which grabbed all of this liquidity to the upside, indicated our EQ, and we have this 15 minutes change of character, guys. Look at this. We have this 15 minutes change of character. What we want to do now is we want to take our trade from the discount, from the premium of the range, and look at this. So our area of interest now in the lower time frame is that we expect price to react from the zone. We expect price to do what? To react from the zone, and which we had, and we have imagine we took our trade from the EQ of this range. Okay, now look at this, guys. We didn't get that too perfect entry, but yeah, this is the lower time frame. This is just few pips, and we know we are already having a tight SL. We are already having a tight SL, and look at this. We didn't get hit, guys, with just a 19 pip stop loss, which is very, very nice. So, and you can just adjust to this point, and you see we have a 12.8 pip SL. So you see, this is how it's very, very important to take your entries from the lower time frame. It help increase your RR, and it help you get on the right side of the trade. Then what we want to aim at is the demand, or the swing low here. But if you notice, we didn't get hit because there is an area of demand here which price respected. That's why it's always good to manage your trade, to always take some profit. So now this is a valid demand, because why? We grab structure to the downside, we have this beautiful change of character, and we this gave a decent reaction. Yeah, because it's valid, so there must be a decent reaction from that point. So hope we get this, guys. Okay, I still want to show us another example. Okay, so look at this now. We have this swing high, this swing low here, and the swing high here. We have this low that was formed. Now we had this change of character. This is probably the 1 minute swing high that was taken out, and we have the change of character from the 1 minute time frame. Let's go check it out. Let's check this out. So let's move to the 1 minute time frame. This is the 1 minute time frame. Okay, wow, I pray we're able to locate this. Okay, 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 it's not loading fast. Okay, let's shift to the 5 minutes time frame. Okay, okay, now look at this. Now look at this, guys. We know this make more sense in the 15 minutes time frame. So look at it now, guys. So we saw this swing low and this swing high, and now we see price took out the swing high, and now we had this nice pullback to a POI here, and we trade off this point, which is a very good point to trade. And if you check with a good RR, this is just 8.6 pips RR, and we target what? The high. We target the swing high, probably the 15-minute swing high, and we see this is a very beautiful trade, guys. This is a very beautiful trade. So this is how to take your entry from the lower time frame. So whenever I post setup and we see price approaching our POI, we want to switch to the lower time frame to get a proper entry from there. What do we do when we go to the lower time frame? We want to see this the lower time frame change structure. Want to see the change of structure in the lower time frame, and that's what we want to be trading from, guys. That's what I want to be trading from. So just put it at the back of your mind. So when price approaches your POI in the higher time frame, it's not just a go ahead. It's not just a go ahead. So we want to exercise patience. We want to see the lower time frame change structure before we pull the trigger. So I hope we find this video helpful, guys. I hope you find this video helpful, and yeah, let's just leave it here till I make the video on market structure, which I'm going to do. Yeah.